one more minute. We'll start this up. If you guys need server unmuted or anything like that, if you're in here want to ask questions, feel free to let me know. Just at me in chat, or go ahead and at me in stream chat, crypto chat, whatever you guys want to hit me at. I can get those answered for you. We'll get this started here very shortly. We'll be looking at some crypto, some euro, some gold, possible new setups, some ADA, couple of charts I've been looking at. But all right, I'm gonna go ahead and get this started now. I appreciate everybody who joined again for another stream. Ready to get some education out here late at night. In here ready to work. So today we're going to be emphasizing liquidity a lot within our education with what I'm going to be teaching you guys today. We're going to look through some euro, some gold examples on how that makes sense to us on the charts, right? We'll go with the theory, and then after that we'll apply that to real time and understand why liquidity rates are present, why they are important to my specific style, and how you guys can start to understand why they make sense to me, right? So like I said, we'll go over some crypto too, but to get this started, right, we're going to look at liquidity rates. That's going to be the main focus of our session today. So to start this off, understanding what liquidity is going to be our basis, right? Versus just, okay, lick rate, equal highs, equal lows. Do I long, short? How does this work, right? Versus understanding why liquidity is present within the market, why it is important, and how we can utilize this next. So to understand what liquidity is, let's just draw a little circle. Bring this right here. So understanding what liquidity is, right? Liquidity makes up the markets. For a buyer, there's a seller, right? For every single buyer, there is a seller. For you to make money in this game, you are practically taking money from somebody else, right? Liquidity is present within the market. The markets move because liquidity is present. If liquidity is not available within a market, price would either just always go up based on other eccentric factors placed within that certain asset, or two, it would literally be sideways, right? Not doing anything due to the fact that there's illiquid value within this certain asset, right? So understanding what liquidity is we understand that it makes up the entirety of the markets, right? The financial markets. Liquidity is the reason that we are here, right? We are looking to make liquidity per se. So understanding that it is what makes up the markets is a very big factor, and understanding that new liquidity must be taken in order for an introduction of demand or supply for a new trend and or a reversal to get into where we want to look to long and short, or possibly get into some scenarios. So knowing that it makes up the market, knowing that it is healthy to see liquidity rates for the introduction of demand or supply, right? It makes up the market. It's healthy to see for a rate of introduction of demand or supply. And we must understand for every buyer, there is a seller. And that's this emphasis on balance. So knowing that for every buyer there is a seller, right? Knowing that there is a balance within the market, and that's what we're going to be utilizing when looking to make trades. we can understand, okay, if this, then that, right? That cause and effect, knowing that if a liquidity rate is present, if I get a break of structure, then price should next target the next liquidity that is available based with structure, based with certain confirmations, right? Understanding that it makes up the market, it is healthy to see raids, and that for every buyer is a seller, that balance is needed within the market. And that's why we see, right, raids before a certain move, certain scenarios. If you are trading patterns when you first started, whatever it was, right, you might get a certain situation to where you're looking at a bull flag, bear flag, whatever you want to look at it as, right? Prices consolidating within that, bouncing off the highs, right? Bouncing off of the lows of your trend line, whatever you have drawn within this price action, right? Price is bouncing off of that. All of a sudden we see a raid to the downside, right? It might look like a retest. What happens? Price comes back and then it explodes, right? And we see that reversal, whereas every retail trader who was sitting here, right? Every single trader who is sitting here and shorting this or longing at the bottom, right? Sitting here shorting this position, shorting this right here, shorting this right here, right? Leaving their stops over these highs of this flag because that's what they have based off of their trend line, based on their psychology, right? If it breaks above this, then they will be out of their short. So they're shorting this every single time it hits that, right? Every single time it hits the top. Opposite goes for the opposite side, right? If we're in a long position, longing the bottoms of the flags, right? Over and over again, leaving liquidity underneath. Why do they do this? Now, because they're putting their stop losses above, right, our flags and below our flags. So above these highs and below these lows, saying, okay, if it breaks underneath this low, right, it's obviously going to continue to the downside. But we understand this as an institutional trader as a liquidity raid. We can see the liquidity that is being built up on both sides. One, we have liquidity here. This is your buy side liquidity as shorts need to buy positions to stop out. So one, you have your buy side liquidity, and then you will have your sell side liquidity just below. Your sell side liquidity is going to be longs that are in positions, right? That is, they have to sell their positions once they are stopped out of a certain trade. So let's go ahead and put that down. Okay, so understanding when a range is created, right, from a recent impulsive move to the back, right, over here, we get a possible break of structure upside. Go ahead and draw this out. Price comes down, breaks with an impulse move, right? A demand zone is given, whatever it is, and we see a large range that is created. We now draw our fibs from premium to discount from the entire impulsive move, and then we start to look for the liquidity and the structure within, understanding that as long as we maintain this low, we have the ability to move higher. All of this price action within is the buildup of liquidity for a raid, for the actual move, right? The reasoning for this is because now that we see that impulsive move that broke structure, right? This is getting a lot of retail, uninformed money, right, to FOMO these positions at these stages in time, right? They're getting buys, thinking that it's a breakout, longing a daily chart, whatever it is, trying to buy at this point in time, right? Putting stops underneath lows within this certain range, thinking that they bought a breakout. Or you also have limit orders that do the same exact thing. So now I have a limit order, right? If I'm uninformed, if I'm the lazy quote-unquote trader and I don't want to do all of the work, right? I see this range, I see this high that caused a new low, I see this break of structure, and I'm like, okay, once this price breaks structure to the upside, I'm automatically placing limits, right? Long limits at the top of this range, so that once it breaks out, then I can continue upside, right? I'll be in my trade and I'll be okay. There's nothing wrong with this, right? Obviously, you're going to risk way more than anyone wants to. But what it is that is going to be wrong based of our institutional perspective, right? Based off of how we're looking at it. So when you have your breakout traders, this is opening liquidity within the market on this breakout to the upside, right? We get a liquidity rate of shorts as well as limit orders are being opened up within this certain trade. So now even more liquidity is available within the market. They're putting their stops underneath lows here, 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 right? This is the early longs. This is that early longs trying to buy the breakout traders basically. So once price creates that range, shows that impulsive move, we now have a break of structure. And we now have a range to work with within that, right? I can now look for my liquidity and look for what liquidity is being left. This is what's going to be very important when you're going to be looking for Wyckoff type behavior as far as reaccumulation or as far as distribution, redistribution, or accumulation, right? And the reasoning for this is we want to see which side is being manipulated more whilst leaving the other. Now what this means is, it's the basic definition for inducement, right? Meaning one side is being induced into thinking that price is going to move a certain way, while the other is gearing up, right? Rating liquidity to the downside, breaking structure to the upside to show that demand is being introduced versus supply. Now, what I mean from this, just looking at this perspective, and we'll show this in the charts here in a few, but understanding the theory of this, as price is coming down, right, we want to see lethargic price action to the downside, the creation of liquidity, so those shorts, right, that are in trades, we want to see that creation showing that everyone is getting in shorts on this downside move. Maybe they thought this was liquidity rate upside. Maybe this was a huge move, whatever it is, right? Whatever they're looking at this as, trying to short this to the downside. This is creating more equal highs, right? We see equal highs, equal highs, equal highs. And we see us constantly taking out the lows. Understanding we're still bullish, right? We can still put in that overall higher time frame, higher low, right? Looking at it like this, just understanding higher high, higher low, continuation, right? Wait for the break of structure, wait for a return of demand, and then from there you can take the trade, right? But at this point in time, understanding that shorts are being induced, right, on the way down. We have a break of structure to the upside, shorts are being induced on the way down. We are leaving highs while we are constantly manipulating lows, and then we create some more liquidity, right? Price manipulates those lows, and then now that all of the early longs, so all of the longs that were in positions over here, 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 trying to buy breakouts, right? Putting their stops underneath this flag, underneath these lows, are now liquidated out of their trades. So now liquidity is available within the market to follow that higher time frame narrative, right? We would understand that we would look for the consolidation, right, at the start of the impulsive move for our demand zone to look to possibly take this trade. And then once that zone is mitigated, go ahead and get rid of this. But once that zone is mitigated, right, we would wait for that demand introduction. So a liquidity rate to the downside, we mitigate demand, and we are leaving highs. This now leaves all this liquidity available within the market. So once I get one break of structure upside, I can now rip through that liquidity, right? Because overall, my higher time frame structure is bullish. Overall, we have taken out all of the early longs, right? And overall, we are leaving those highs. So that is giving me now targets as well as structure areas and take profits that I can look to possibly take profits with as well. Another good rule that I set for myself as far as take profits go is where would I look to short within this, right? So we understand this is bullish, but we see that this high caused a new low internally, okay? So we have internal breaks of structures here, internal breaks of structures here. So if I'm going to want to look to short this, understanding that this is still bullish, one, I want to short in premium, right? I can see liquidity that is available within this range right here, and I now have targets available internally to take profits at that are feasible, right? And give me that area of direction, because I understand, hey, well, if price came up back to this internal high, right? Took liquidity here and then continued to the downside, we still got the trade that we needed, right? We still had a profitable trade and we were still able to get out and still able to be safe because we understand what price is doing, right? The objectives that are needed for price to hit. So understanding the theory of everything, we're now going to get into a couple chart examples, Euro USD and a little bit of XAU. But understanding this, right, doing our top-down analysis from higher time frames to lower time frames, if we look at our weekly time frame, we understand we just took a lot of weekly liquidity. We're starting to mitigate areas of demand, fill imbalances down here, but overall we are still bearish, right? So every single day, until we are proved wrong, right, until we get a daily break of structure upside, and until our bias, our downside bias is proved wrong, we will still be looking for sells. We can look at this as that downside liquidity. Now, why is the reasoning from this? Okay, so understanding that Euro has been in a downtrend for weeks, right, months at this point. Understanding that we have been in that downtrend and have put in certain areas that can look like possible breaks of structures to the upside, right? Areas right here, area of demand. That put in this new high here on the weekly, right? Area of demand right here that put in this new high on the weekly. Understanding what happens at these points in time, right? We can see where price switched bearish, where price rated liquidity versus broke structure, and understand the actual movements from that. So going back in time, to make this very simple, we see a large impulsive move on the weekly time frame, right, that brought a break of structure downside from lows that caused new highs overall. So to make it very, very simple, right, very, very large impulsive move to the downside shows us that break of structure. We now can look within this certain range to look for possible areas of supply or demand, liquidity, to look to possibly take a type of trade, right, or understand our direction. So understanding this impulsive move to the downside, right, we see price raid liquidity to the upside, respect highs that cause new lows over here, right? We see a break of structure downside, liquidity raid upside, mitigation, and then continuation to the downside whilst we are leaving lows. So what going with what we had talked about a second ago, understanding just within this price action, right, this behavior right here from this high that caused a new low right here, I see this as a liquidity rate to the upside, right, mitigating previous highs that caused new lows. So if we look at this from a wave perspective, right, understanding price made a new low, that high was respected, an internal range was formed from this move right here. Price came up, right, made another higher or lower high, and then from that we got that continuation to the downside. So price never violated that high that caused a new low overall, right? Instead, it just respected demand, respected institutional candles, respected zones of distribution that showed supply on these moves to then the downside. So knowing that, right, overall, we are still looking at that higher time frame structure. We can now start to build a range and say, okay, I'm not proved wrong as far as longs go until this high is broken, right? Or I get a low that caused a new high from this break of structure to the downside, right? This high caused a new low, so until this high is broken, I'm looking bearish. So one, understanding we get a break of structure to the downside here. If we look for the consolidation, right, before that breakdown for our supply and demand zones, in this case it's going to be supply, right, because sellers overpowered the buyers within this scenario. The entire weekly consolidation is here for your supply zone. If we wanted to do some refinement, right, to institutional candles within, just on a weekly time frame, we're looking at something like this. We get a break of structure downside, price comes up, respects that, and then causes new lows. right? We get another distribution that is put in, another break of structure downside, more supply is introduced within these areas. We see that mitigation. We see another break of structure from internal lows that cause new highs. Right, and this is just understanding supply and demand. We're going to throw liquidity in a second, and you can start to see how they move back and forth, how the early shorts and longs are taken out. But at this point in time, we get a break of structure to the downside, mitigation of supply, new lows are being caused, and this is where it gets interesting, right? So at this point in time, let's just bring this back a little bit right here. And understanding our range.
Daddy Flow.
That boy Scars, what's good with you, man? Man, that boy, I haven't talked to that man in a minute. It's good to hear you, brother. But anyways, right, we get our supply that is being introduced. We get those respects of supply. We get new lows that are being created. And from that, we can start to look for our supply and demand within this point in time, right? So if I'm understanding that this reaccumulation caused this new high internally, and then we saw another break of structure downside. So anyway, I'm looking at this as a liquidity raid. Why am I looking at this as a liquidity raid at this point in time? Because one, right, we see that break of structure downside. This has now created a range. This has now induced a lot of sellers into shorts, right? You get your breakout shorters right there, shorting the bottom of this breakdown, whatever it is, they're trying to short based off of all of the price action that they are seeing here. Now, we understand that once we receive a break of structure, right, we are looking for that pullback to mitigate that sponsorship of that move. Now, we see that pullback to mitigate that sponsorship of that move, right? All the early shorts are then taken out. And now that the early shorts are taken out and supply is mitigated from a previous high that caused a new low, we look for the other break of structure. What do we receive? Another break of structure to the downside, more displacement, more breaks of structures. So that is now confirming, right, our overall higher time frame bias, as well as getting us into positions to where we can be quote unquote safer, right? More protected positions at these protected highs versus getting in areas here, and as well as increasing our risk to reward. Now, understanding that same exact theory, in that same liquidity theory, if we receive another break of structure downside, right, we're looking for that consolidation before the breakdown. This is just on a weekly time frame, not doing refinement right now. We're just understanding the behavior. We receive a breakdown, another breakdown, right? So now we have a lot of shorts within trades as well, and that is being shown from these equal highs that are present. So all of this buy-side liquidity that is available here is showing me, okay, there are early shorts getting in trades from this breakdown here. We're looking higher within premium anyway, right, of our move that caused a new low. So, one, why would I short and discount, right? I'm going to look to short and premium if structure and everything proceeds with, right? And I understand that there are a lot of early shorts. So at this point in time, even though it might look like we're still breaking down, right, on a weekly time frame here, which I do believe price does create another low here, but that doesn't really matter at this point in time, right? If it looks like we're breaking down here, I'm still understanding that I'm looking for that sponsorship, right, for areas of unmitigated institutional candles, whatever it is within this area, to look to take my shorts. So we watch price, right, and we can see those highs being created, all of the early shorts. We can see new lows being formed. So every time a new low is being formed, right, we are getting more shorts, more breakout traders to the downside. This is opening up more liquidity now, as well as we're rating liquidity to the downside. So internally, from this low to this high, we caused an internal possible break of structure. What does this mean? This means if over here, right, after mitigation of demand zones down here, institutional candles from this move that sponsored this high, I can still see overall, right, price moving up, creating new highs on areas over here, if we can break structure from these supply and demand zones right here. Because then I would look at this more as a reaccumulation, right, as we're manipulating lows and leaving highs versus a distribution overall. But We are looking for now our liquidity. We can see our liquidity being built up, those equal highs, right? Structure is still bearish. And we are looking for our overall, right, higher time frame supply zone. So now price comes up, raids that liquidity, mitigates our supply zone, right? And now all of this week's price action, right, or months of price action, right, have been taken out in a month, right? 4 weeks. And then from that, 2 weeks later, 3 weeks later, you get that actual move. So all of this buildup is literally just retail and uninformed liquidity, right? We are looking for our goal, our point, right? Our objective versus looking to catch a breakout, looking to catch a bottom, looking to catch a top. We are looking for that goal. Same exact scenario, right? Now that the early shorts are taken out of the trades, supply has been mitigated, and we see another break of structure downside. If we look for the candle before that candle, right, that broke that structure point downside, we have another area of supply within here. We have institutional candles available within here. So now if price comes back up, right, we would look for it to respect that, then supply, and then continue to the downside from that. What happens? Price raises liquidity to the upside, puts in a new low, raises liquidity to the upside here, but as long as I'm holding this high, right, not showing any bullish signs out of these highs, right, out of this area, right, price comes back up, or price comes over this high right here, but what happens? Immediate bearish engulfing to the downside, filling areas, mitigating areas, institutional orders, right, higher within this supply zone. This institutional candle here. Now, what do we see? Price again raids liquidity, puts in more downside, comes back up higher into our supply zone. We are still looking for that bearish movement, right? Noticing that overall, these candles, right, aren't putting in those impulsive moves to the upside and instead just raiding liquidity to the downside, right? Leaving now lows. So as we are mitigating our area of supply, if we look at this from a non-institutional perspective, I'm long. You know what I'm saying? Like, I'm longing this breakout. I am longing this bull flag breakout, this weekly breakout to the upside. And from that, you can see that same exact thing. You can see where lows were caused. You can see where, after price broke out, quote unquote, right, where the liquidity was present within that. So now that price is, quote unquote, breaking out, but we understand that it is mitigating areas of supply from highs that cause new lows. We are looking for that continuation to the downside. What receives, right? We get liquidity raised to the downside and then that final move. So now that we understand, okay, we got a break of structure to the downside, we are waiting for equal highs to be purged, right? Our early shorts to be taken out, so then we can enter at a more protected position for an increased R&R. Once we wait for that to happen, wait for that price mitigation, we can then, right, refine to lower time frames and get to that point in time. But I wanted to just show you guys this as a behavior standpoint, right? Understanding where the liquidity was present, where areas were mitigated, and where certain people, certain uninformed money, right, was induced into certain trades. That's that same scenario, right? As price is coming up, we saw the first liquidity raid to the upside. Here, mitigation, we saw a move down, and then what happened? We created more lows, more liquidity to the downside, right? So once I am in trades here, I now have targets available, areas of unmitigated, right? Institutional candles, areas of unmitigated demand from internal lows that cause new highs, as well as liquidity that is giving me major confluences, right, to look to possibly take a trade, as well as to look to take a certain trade to a certain take profit, right? So as price is coming up, we understand it is still bearish. We are looking for a lower high. Retail and uninformed money is understanding this as bullish, right? They are longing this quote-unquote breakout. All the lows that are present are from that. And once all the early shorts are taken out and now longs are in trades, We mitigate our areas of supply, and then from that we see that downside. So it is literally the opposite price or the opposite bias as far as algorithms and institutions, right? When understanding retail perspectives, because as an algorithm, as an institution, you want to target the consumer, right? That has the least amount of information available. Why do you think scammers target older people, right? Same type of theory, right? Same type of thought process, because it is easy to them, right? It's easy, it's simple. They just need to do this, this, and this, and be out. Yes, it gets to that point, right? With these institutional perspectives and with this analysis, it's like riding a bike. Once you see it, you'll start to see it every single time, right? But understanding that we are buying with a plan and buying with an exit is better than that retail perspective, right? Of I'm buying this because of this, or I'm buying blindly, selling blindly. I just want the money, right? I'm getting FOMO, whatever it is. My friend over here has a 100% P&L, and I'm trying to get that, whatever it is, right? When they get into trades, as an algorithm, as an institution, as a market manipulator, those will be the people I will target. Those will be that liquidity, right, that I would want for a price to move. Now, understanding that we don't know, right, unless we are in a hedge fund, which I am not, we don't know exactly where price is going to move, right? But we can get the overall bias due with all of these confirmations, as well as areas of unmitigated demand and supply, right? To see where institutions and algorithms, right, are manipulating these retail traders. And that's why I say you can see it all on a chart, right? Because I can see where retail got in on a chart with candlesticks. I can see where institutions got in on a chart with candlesticks. I can see where my trades went wrong, why they went wrong, and then I can use that to be able to fix it in the future. But understanding, right, overall, as an institutional perspective, we are looking for that introduction. Where did the institutions enter? We saw distribution play out, right? Creation of supply, institutional sponsorship. So I know, okay, it's here. Okay, distribution, new lows created, institutional sponsorship. We are looking, right, for certain objectives. I am looking for this objective here after this objective is reached, right? I am looking for this objective here after this objective was shown, right? We got a break of structure to the downside. So now you're just looking at it like this, overall within theory, and then you get that continuation to the downside. That's how you get that higher time frame narrative, as well as block out that noise, because we have those objectives. We understand that liquidity will be created before certain areas are mitigated, and because of that, right, we can start to get into certain trades to where we are a lot more protected as far as certain highs and lows go. So overall, we're just looking at this as a higher high, higher low, higher high, higher low, higher high, higher low, right? Whereas retail's looking at this as breakout, breakdown, breakout, breakout, breakdown, whatever it is, right? Going crazy, trying to figure out direction, while we are just understanding that we are bearish. So we can look, right, for new lows, for new liquidity to be purged to the downside, unless we are disproved, right? Unless that previous high that caused a new low is then broken, which is completely fine, right? Which is also why I say it's okay to be wrong, because now I have another bias that has been disproved, and now I'm able to run with that. So let's go ahead and get rid of all this.
Head and shoulders?
On what? What you shorting?
No, this chart right now, is that a head and shoulders?
Yeah, retail head and shoulders right here. Left shoulder, head, right shoulder, continuation to the downside, right? Same scenario right here. As a retail, right, trader looking at this as a head and shoulders.
Oh, it's like a head and shoulders inside of a head and shoulders.
Yeah, it's a whole lot of head and shoulders going on. But even with that, right, as a retail trader, where are you told to short the head and shoulder, right? Breakdown. They're in trades right here. They're in trades right here. They're in trades right here. What happens? Liquidity is present. What happens? We left our areas of institutional institutional sponsorship behind. What happens? We take out that liquidity. So all retail who shorted that head and shoulders, right, are out of the trade before we get that continuation to the downside. That liquidity is opened up within the market, and then more supply is introduced, and then we get that move from that. Right? Using retail patterns to now get that same exact bias overall. You could say, you're.
SPY did that to people this morning.
Yes, actually, ES was a very good example.
Yeah, it hit a low. People started shorting at the low. It railed up.
Railed.
6 pips, and then it railed the other way.
So mean, dude. But you learn to love it, right? Once we understand what it is, and we're not in there, and we're not going crazy because we don't know what's happening, right? We're like, that's beautiful. Like, that's a beautiful price action, right? Yeah, we'll show ES here in a second. That same thing. I'm going to show Euro and then gold as well. But let's just go to ES real quick, because that was a very, very good example.
Yo, Flo.
What's up, brother?
Why did you delete all your YouTube videos?
I got them. They're unlisted. You just need the link.
All right, can you send me the link?
Yeah, I got you. I'll send it out once I finish it, or I'll just DM it to you.
All right, here you go.
All right, brother. But yeah, same exact thing with ES, right? We are in shorts from this institutional sponsorship, internal highs that cause new lows right here, right? Supply is introduced, we get that move to the downside, but that same liquidity is present. So all retail who then shorted this breakdown from these lows, hold on, let's get rid of this. From these lows, right? All of this long liquidity, all retail that shorted that breakdown, clapped, right? All breakout buyers, whoever had their whatever it was, right, limit orders at these zones, trying to take this to the downside, taken out immediately, right? We see the liquidity rated before we then see the move. Over here, we see liquidity rated before we get that move, because then we can introduce demand or supply, right, within our trend and look to possibly take our trades. Euro, same exact thing. I'm looking for possible longs, right? But knowing that our overall bearish or our bias is bearish, if we get, right, an hourly breaker structure to the downside with displacement, or a 4-hour, right, then we will still look to take it to lows, to take it to the next draw of liquidity from our overall daily, right, and weekly and monthly bearish bias. But understanding that lows were created, right, on a higher time frame scale, equal lows were created, that shows me that early longs and shorts, early longs got in trades at this point in time. We don't see a lot of volume. Yes, we get one impulsive volume candle on this move right here, but is it what we want to see? No. Why? Because we need to see that higher low formed within this area. So on the hourly, if price comes into this area, right, creates a new high, and then I can now confirm this area, possible demand, right, with my 15-minute time frame. Once it comes into there, right, we see this high formed right here, and then we look for the 15-minute to do that same exact thing. What happens when price comes back in? Nothing, right? We don't get any structure formed. We don't get breaks of structures upside. So I leave it be. And what happens? Price moves to the downside. That's completely fine, right? It's okay to be wrong, because we are understanding that once everything comes together, then we can look to possibly make that trade. But this is that same scenario, right, where retail, uninformed, and even quote-unquote smart money traders, right, get very frustrated because they see this right here. They see this demand that was created, and I had pointed this out because I saw it as well too, right? I needed to confirm everything, but this is what was shown to me at this point in time. I said, okay, this could have been a liquidity right here, right? Mitigation of demand down here, continuation to the upside, break a structure, possibly. If price comes back down, right, continues to break structure from highs that cause new lows, then I can look to possibly take this trade to the upside. Now we understand. Price comes back down to mitigate that demand, right? And then we don't get that higher low that is formed on that 15-minute time frame with that impulse to show me what I wanted to see before, right? You might look at this as, well, demand, right? Higher high, higher low. But we know overall from literally the monthly to the hourly at this point in time, or sorry, the 4 hour at this point in time, right? We are bearish. So if we look left and look back to highs that sponsored new lows, we have our previous range right here, and then we have a new range that was created. High to low. If I'm looking before the candle that broke structure to the downside, I'm doing body closures. So this candle closed. Yes, it leaves an imbalance as well. This is my supply zone. Right, candle before that breakdown, supply zone is present, and liquidity is available as well. So we just looked at this from a long perspective and saw all the places we were wrong, and then now I just proved that, right? Showing our higher time frame overall bearish bias from a lower low to a lower high, lower low, lower high, lower low is formed, right? Lows are taken out. We are still looking for that bearish bias versus trying to catch a bottom, right? Because it's not there yet. We need every single confirmation to be able to take that trade at that point in time. But Euro is a great example of that because this price action could look very bullish, right? From highs that caused new lows over here, demand zones that were created, right? Yes, this was a valid setup for this certain point in time. If we were not at this price action, right? If price was at this point in time, we received that break of structure upside, right? We can see highs that are being formed. We have an area of unmitigated supply as well. I now have an area for a counter trend long. Why do I have an area for a counter trend long? Well, because structure is coming in place, right? I get my areas of unmitigated imbalance, my areas of unmitigated supply and demand, and I'm looking to now take those. I have now an objective, right? I have an entry and I have an exit, and I have a plan for that, because I could say if price respects these highs right here, right, no demand is being shown, then I won't get in this trade at this point in time, right? We see price come back up and then tap those highs, right, into that supply, and then after that supply is mitigated, right, we can go on to our lower time frames, wait for breaks of structures to the downside, supply mitigation, whatever is being shown, to look to possibly continue this trade to the downside. But we understand that because we had everything come to, right, we still had all the confirmation that was needed. We had an objective, an entry and exit, right, and a plan within that, then we were able to take that trade. But Euro is a great example, right, of that buy mentality, where everyone is just trying to catch a bottom because they look at this and they say, and I've done the same exact thing with gold, right? I've said, okay, a lower high could definitely be formed a lot higher within the range, right? If structure comes with, then we have a very profitable move on the way. But if you automatically look at this and say, well, it's gone so far down, it's 461 pips, 4.46% back to the next high, right? That's a lot of money, so I'm going to long. That's not what we're doing, right? That's where you can get into the situation to where you are liquidated over and over and over again, even though you might be right on certain direction. But because you are putting it basically to chance, right? It is unfeasible and you are not managing it yourself. You don't have that time effectiveness that is needed to trade, right? To trade effectively, then you get that point in time to where you are just longing over and over and over again. And then you look back and you said, why didn't I just short? Because I could have just shorted and held, right? And then you go see where that entry was. And then all of a sudden, all these longs that you were trying to get into, right? You're now liquidated down here when you had a short position or something similar right here. Break a structure down here, supply mitigation here, break a structure down here, imbalance fill right here, right? Another break of structure, imbalance is filled. Higher highs and higher lows, or sorry, lower highs and lower lows are being formed over and over and over again. Whereas you're just on the lower time frames trying to catch bottom, right? Trying to catch bottom because of this overall higher time frame range. And you see all the profitability within it. we need to still understand where price is moving, where supply or demand is being introduced, and where we can possibly look to capitalize upon that. Let's actually take a look at Bitcoin ETH, and I wanted to show some ADA too. I believe that Euro just showed us a pretty well understanding of the liquidity perspectives, what we were looking at. Anyone who has been in stream with me these past few days, past few weeks, have understood that we have been bullish on ETH. This is awesome to see, right? I'm loving to see some finally institutional volume that is entering the market, looking for now trades possibly to take these to the upside, higher within our range, right? I'm looking at 1300 as first take profits from this range liquidity that is being formed, so we can see something like this to where we pop out of the range, right, and then start to slowly come back down, mitigate areas of demand, right, and continue to the upside. Preferably, I would like it to see us respect this supply right here, continue to the downside over here, show that lethargic behavior, right, break structure to the upside, introduce demand, show the same thing it did over here, and then from that we get that continuation to the upside. But remember what we were saying in our streams, right? As long as we didn't get that displacement to the downside, a fat candle closure, right, underneath any of these, or this low that caused a new high internally, right, we got a break of structure here. This is where that first move was present. Price came back down, and then we got another break of structure upside. And I believe it was Drags was asking me about a certain scenario to where he believed the break of structure was up here. Now let me show you something that we talk about sometimes, but is very, very important as far as understanding external ranges. And I have no issues or anything with Photon, how he teaches trades, anything like that. I like what he does, right? He's very, very simple. But I've found with his teachings, right, there can be certain points to where you get confused looking at this external high that caused a new low as the break of structure, or right, looking for this low to be broke for the next continuation to the downside, which gets us in that point in time to where we're almost breakout trading, right, versus understanding where supply and demand was introduced and understanding where the actual breaks of structures occurred. Now, what I mean from this is looking at a 4 hour from this perspective, right? We can see that price came back down, rated liquidity to the downside, came back up, filled areas of supply that caused this new low right here. From that, put in a new low. But this is where it gets interesting because price started to consolidate. Price begins to consolidate, right? This is a 4 hour chart. So 4, 8, 12, 16, 24, 28, right? 32, 36. So about 3-4 days of price action within this consolidation, right? And then we get that move to the downside. So this is telling me that there is a lot of back and forth, right? A lot of equal bias within this area. So from that, there should have been a liquidity raid and then an introduction of either demand or supply. In this case, it is supply, right? Because it is a redistribution and then accumulation to then distribution. And so this high right here on the 4 hour from this drop, supply creation created our recent strong high versus this high right here. Yes, this is external, right? This is a move. But to me, all this was a liquidity raid, mitigation, and then price started to move down and we started to base. This is where it gets important, right? Understanding our drop-based drops, rally-based rallies, what creates demand, what creates supply. This creates supply. What happens? A bunch of highs are present, right? A lot of buy-side liquidity is present. We see that new move to the downside. A bullish engulfing is put that is showing me, okay, we're definitely possibly rating liquidity, right? If I'm playing lower time frames on a more riskier type of play, right, type of perspective, I can look for trades after this bullish engulfing to the upside here. On the hourly, it was a break of structure, right, reaccumulation, and then from that we got that move to the upside. But knowing that this was our most recent strong high, from our accumulation to then distribution, going on lower time frames, I'll show you exactly what I'm talking about, right? accumulation, manipulation of lows. People are longing, demand, 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 demand. What happens? Price moves to the downside. Continues to the downside, liquidates all of those traders, liquidates lows here, liquidates lows here, and then from that, right, more highs are being present, break of structure is produced, reaccumulation has occurred, and then from that we get that final move to the upside. But understanding that this is our most recent strong high, this is where price broke structure, right? This is where I was looking for price to break structure for a higher overall bias within this range, right? If we are back here, and I say, okay, price broke structure to the upside right here, right? Demand candle, candle before candle that broke structure, caused an impulsive move. I'm looking for that area to be respected, and then from that, I can see newer highs being formed, right? From areas of supply over here. What happens, right? Price creates those new highs. I'm now in and out of my trade. In theory, right? Entry here. First take profit here at the week high from our bullish, right? Bullish direction, right? That we have put in. We take our take profit at the week high, and then we can look for areas of unmitigated imbalance, right? Supply and demand over here. But knowing that this was our most recent strong high that caused a new low, and this was the cause of that break of structure, we can look for then that demand, right, to take those trades to the upside and say this was a introduction of demand, right, from a liquidity rate to the downside versus a continuation, because we saw our most recent strong supply or a strong high that was created, right, that supply that was violated almost immediately following a move to the downside. We want to see, and then if I go on a higher time frame, right, on the daily, you can see exactly what I mean. That same exact behavior we saw down here, right? Liquidity rate, bullish engulfing. Go to the daily time frame, same thing. Liquidity rate, bullish engulfing. That's showing me demand was introduced within this area over supply. And then once price comes back up here, right, we start to create more highs. And that's showing me that more shorts are in trades from this areas of supply, whatever it is, right? And we create more highs. But now overall, right, as we were talking about from Bitcoin and ETH, let's go ahead and let this play out so I can get rid of this replay mode. But we just put in new demand, right? Casper had posted this. You guys will be watching this, and I'll go ahead and post this after as well. I do like this 1102 area, right? After we saw, again, this volume that was created right here. Liquidity rate to the downside, right? Look at the volume that is being presented within the market on this move right here. Liquidity is rated to the downside. Break of structure is ensued, right? We have our reaccumulation that is present. Institutional candles within that, right? And then what happens? Liquidity is rated again. Demand is mitigated. Highs are left. And from that, we get that move to the upside. I believe there's a scenario earlier today, right, where some people were looking to short. Same exact thing. As long as our structure comes in place, right, and as long as it is showing us that same move over and over again, and we are not proved wrong within our analysis, then we can still look to be on the right side of the market, right? Structure is still bullish overall, right, from this new move that was being placed in. So I'm not going to short until I receive displacement to the downside from a low that caused a new high. At this point in time, right, we have 4 hour bullish behavior, right? So I would at least want a 1 hour break of structure to the downside to then confirm my 4 hour lower high. And then once that 1 hour break of structure to the downside is present with displacement, with volume, after a previous mitigation of supply, then I can look for new supply that was introduced, confirm it with my lower time frames, and then look to short it to then levels of demand, right? Areas of unmitigated imbalance that caused this new high, right? And then now I have a counter trend trade to an overall trend trade. If I get a break of structure to the upside here, right, I now have a long present. Or if we continue to the downside and respect highs that cause new lows internally, and raid liquidity to the downside here, right? Mitigate those demand levels at the bottom that we had talked about earlier, right? If we get that move to the downside, price comes back up, and it does not break structure to the upside, I'm still in the shorts, right? We are perfectly fine because we are trading the trend. We have feasible take profits. We are in and out of our trades. We have our stops at break even, and we are good to go, right? Versus trying to catch a bottom or catch a top, because I can now catch the top and the bottom of this move right here, right? I can catch both moves, and I can be protected, and that's when we can start to get into hedging, because we'll get into this point in time to where I'm taught, right? When I first started off, it was look for this type of theory, right? Break of structure, impulsive move, areas of demand, imbalance, and then look for price to lethargically come back into that, and then look for the move from that. This was the theory as what I was looking for, right? For an overall move from my higher time frames to my lower time frames. But utilizing this, understanding that once price puts in that impulsive move, right, liquidity is going to be introduced within the market, and we now have the availability to come down and mitigate orders that cause this move. Once I receive a break of structure downside over here, right, and supply is present, then I can look to take trades to the downside, and I now have that higher time frame narrative, and then I can slowly, right, start to enunciate that into smaller time frames. I can start to scalp if I wanted to, right? And I can understand these certain range directions based off of my overall bias. Now, if my overall bias is wrong, right, and I'm proved wrong, and I get that move to the downside, that's perfectly fine, because I'm in, right, where areas of supply were introduced. If this was just a liquidity rate to the upside, continuation to the downside, right, then I am perfectly fine at that point in time. Is there any questions or anything that anyone had before I show Bitcoin here in a second, and then we get this ended? The stream will be posted on YouTube, but I'm gonna go ahead and look through mentions right now, see if there's any. If not, that's perfectly fine as well. Let's get rid of these and then go over to Bitcoin. Is this chart? Yeah, okay. So same exact scenario, right? And this is why it was, Bitcoin was very clean, very, very clean to show this. Going back to our liquidity perspectives, what we were talking about earlier, why we need to see raids for the introduction of demand or supply, as well as why we need to see certain areas of liquidity for feasible take profits, right? We received a break of structure upside here. Same exact scenario as ETH. Most recent high that caused a new low, our drop base drop, right? Drop base drop. We received that break of structure to the upside. Price then mitigated areas of demand, and it came up, and then it made a new low. Why did it make a new low? Well, we had a move that broke structure to the upside, areas of unmitigated demand, right? Areas of imbalance that was present as well, and early longs. So now that all the early longs are taken out of the trades, price comes back down, mitigates areas of unmitigated demand, breaks structure to the upside, and now all these shorts that are present within this trade right here to the downside are now going to be taken out. Why? Because structure has switched bullish, mitigated areas of demand, and this is very important, and left very, very clean highs, right? It left those highs. It broke structure to the upside, left highs, created more liquidity, and then as we are coming down, rating liquidity to the downside, filling unmitigated areas of imbalance, we now have the ability to move higher. And now we are in our trade, right, at this area, from now this higher high, higher low, targeting the higher high, take profit as well as liquidity, right? That's showing me even more confluence as far as the take profit goes. And then once that is given, right, we can do that same exact thing. But Bitcoin, I would like to see, again, this move has been starting to put in some institutional volume, right? We are starting to see some accumulation, reaccumulation within these areas. I believe Casper had this area marked out as well. This 1900 zone, but I personally still want to see if we can raid liquidity from these lows here. If not, that is perfectly fine, and we will look to play this demand zone instead. But if price can come down, raid liquidity from these lows that were present here, as well as this low back here, and mitigate a lower time frame right zone of demand within here, possibly the 50%, come back lower into this area, raid liquidity, and then from that we see our move. That is what I would like overall, right? Because as an institution, as an institutional, right, quote unquote, trader, we are technically greedy, right? We are greedy for the most profitability opportunities, right? That's why I am so patient or wait for so long, because I am that greedy. I want to be able to know that it is right, and I want to make a lot of money, right, on that certain trade. So if I can do all the work and wait till that point comes, then I can allow my greed to be pushed out, right, on this type of, or on the charts, right, and with my trades. But I also wanted to go over ADA. So let's do that one real quick. Quick little TA. But this one's fairly simple. Weekly rally-based rally that was put in. Obviously, this demand caused this new high overall. We get a break of structure upside here. We are now currently mitigating that weekly rally-based rally that was being put in. We did get that range trade before over here, right? And then we saw the moves upside. The reason I wasn't super interested in this coin until now was because of the liquidity that was present after our longs were in place. So after we got in longs, right, we received that move to the upside. We were out of our take profits, and then we came back down and we were stopped at break even, or actually stopped in profits, right? Price came back down and started to consolidate, and this is why it wasn't healthy to me. And there were a lot of people in chat asking me, do you guys want, or are you trying to long ADA? How does it look? Whatever it is, when we were in these areas. And I said, okay, it doesn't look bad, right? We have daily moves to the upside, possible daily breaker structure to the upside, right? But these lows are super, super unhealthy to me. Price came back down into these areas and created all of these lows, right? So at this point in time, I wasn't super interested in this trade due to the liquidity that was present. But now that we have rated that liquidity and the 4-hour has shown, right, that break of structure to the upside, if we can mitigate demand, hold demand, possibly come back down, raid these lows, break structure on the hourly, this is all going to be depending on Bitcoin and Ethereum as well. That's why I like to look at some of these altcoins once I get a higher time frame move on ETH or Bitcoin. But, right, if we can come back into these areas, mitigate these zones of demand that cause these new moves, one is around 42 cents, 0.422, then I will look for higher prices into the range. This one will be posted as far as entries and exits go. But ADA is one that I have my watch list on. Other than that, I'm going to be looking at mains, Bitcoin and ETH, and then Euro and some gold as well. Unfortunately, we won't be able to get into the gold today, but it is perfectly fine. Euro showed me everything that I wanted to give out to you guys today. If there's any questions or anything like that, feel free to let me know. And I am going to go ahead and end it here. I appreciate everyone popping out.
I have a question. Can you answer?
What's up, brother? Yes, sir.
Okay, so if we have a range that there is a supply and we move to the 1 minute time frame, should we wait for a change of character before we put our trade?
Okay. Yes. So personally, how I do it is top-down analysis from higher time frames to lower time frames. I confirm my daily bias with my 4-hour bias, and then I confirm my 4-hour bias with an hourly break of structure, or quote-unquote change of character. I confirm my hourly with a 15. I confirm my 15 with a 5, and then I confirm my 5 with the 3, 2, 1, and then you can even confirm the 1 minute with the 15 second. But I need to keep my higher time frames and narrative from my higher time frames to lower time frames before I can enter a trade based off of the 1 minute. I need to have all of the confirmation following. Does that make sense?
Yeah, thank you. And
Cool.
also, can you help me check SNX?
SNX, yes. I think it was XNX and actually DidX. as well that I liked. But yeah, let's take a look. Yeah, daily looks very good. Candle before candle that broke structure to the upside. We have an institutional candle down here. Just doing daily consolidation for the move. Here's our demand zone. Candle before candle that caused that displacement. Impulsive move is our demand zone here. Let's draw this out. I would want us to come lower into this institutional candle and take out these lows right here. Take out the early longs, mitigate this institutional candle down at 1.75. And then from that, see a move higher. But if structure still proceeds, right, if we're still getting breaks of structures upside, we got a 4-hour move here, imbalance that was being in place, more demand that was introduced. At the 2.447 level, if we come down into that area, break structure on the hourly, show that demand, right, show that imbalance as well, and then down to the 15.51, then I will look to take this to the upside at higher areas instead of coming down lower into demand. But I do like SNX a lot. Let's look at the weekly.
Yeah. Also, please, can you put on your yeah, but
Oh, I'm sorry, brother, you're cutting out a little bit. Say that one more time.
oh, sorry. I said, can you please put on your watch list so once you want to trade it, you let us know?
Yes, sir, I got you. I got SNX and Didix as well. I think Oscar mentioned it. DYDX, USDT. Yes, also a daily breaker structure upside. I was looking for lower prices, but if price can come back down, right, mitigate these areas. Yes, we did fill imbalances. We could possibly just come take out these highs, put in a distribution, and then come down lower to fill these areas. We have left a lot of lows, right, as well as unmitigated areas of demand. But both SNX and DIDX are very similar as far as to what I'm looking for, and the same goes with Bitcoin and ETH, right? We're still looking for those lower prices until we are looking to long with confirmation. But yes, both SNX and DIDX will be two that I'm watching out for coming into our higher time frame perspective and narrative. Those are definitely both charts I really like as far as altcoins go. As far as Forex goes, I'm going to be looking at gold and euro, and then 88 ETH and Bitcoin. That's pretty much all I got for me. But yeah, I appreciate all of you guys popping out. Is there any other questions or anything like that you guys had before I hop off here real quick?
Sorry. Where can I see your trades? Are you in the MP?
Yes, they'll be in either MPIX or they will be in the FX analysis section. Just make sure to have the FX ID and notifications on, and you'll receive those. But all right, with that being said, I appreciate everyone popping out again, getting some education, right, information. Any feedback is greatly appreciated. Comments, questions, however you guys can leave it. Thank you guys again, and you guys have a great night.